Welcome back. Well, a medtech and pharmaceutical company, Blue Jet Healthcare, has opened their IPO for subscription today. The subscription will be open for the public till the 27th of October. We have Shiven Arora, who is the MD of the company, and Mr. VK Singh, who is the COO of the company, joining in to discuss the IPO in detail and a very interesting business model as well. Shiven, as well as Mr. Singh, thank you very much for joining in. Shiven, right before we started this interview, I was just discussing with Mangalam that it's difficult to describe exactly what the company does or to categorize you as a medtech company or an intermediate company. So give us a sense in terms of the business that you all are currently in, because it is an interesting segment, contrast media, artificial sweeteners and pharma intermediates. And who exactly would your peer be and your competition right now?
Firstly, thanks for having us. And so basically, contrast media, high-intensity sweeteners are all related to the performance. These are performance chemicals. Contrast media finds its application in the medtech industry, as you pointed out. It's a part of a larger solution for CT scans and MRI. We make intermediates for innovators who control more than 75% of the global market. That's contrast media. And high-intensity sweeteners are artificial sweeteners that finds its application in oral healthcare, beverages, and pharmaceuticals. So there, the performance nature is the taste and the taste consistency.
So, from what you say, it sounds like... yeah, go ahead.
No, please, after you.
So, what you say, it sounds like a very niche, high barrier to entry and very specific use case sort of business. Just wanted to understand, what is the size of the combined market and at what rate is it growing? And there is some client concentration because of the niche nature of this business as well. Is that a risk?
I think that would be the biggest strength for the company, because I'll just take a step back and make you understand contrast media is a $5.9 billion in-formulation business. And globally, it's been controlled by 4 key players, 4 innovators who've been in the segment into imaging for the past 50 to 100 years. And being a small partner as an intermediate supplier to them helps us ride the overall growth journey. As per IQVIA, this segment is projected to grow by 6 to 8% in the next 2 years. But for us as a company, our intermediate business has grown at a CAGR of north of 20%.
Mr. Singh, maybe you can, answer this for us. We do understand that companies like Divi's Labs are also looking at the contrast media segment. So is there increasing competition within that space? And 2, there is an opportunity. Is there an opportunity in India when it comes to medical devices? Because there's a lot of indigenous manufacturing or a focus on indigenous manufacturing which is taking place simply because of the amount of dependence that we have currently on imports. On these 2 points, Divi's Labs or companies such as Divi's Labs entering into this space, as well as the opportunity within India.
The customers that we deal with have more than 75% global market share. So when we supply intermediates, we not only supply, our sales are concentrated in Europe because that's where the API manufacturing hubs are, and they are increasing more capacities. And contrast media as a segment, yes, there is also some medical device manufacturing, which is coming into India. But at the same time, these 4 companies, these innovators, have held this global leadership for the past 10 years, which is more than 75%. Because it's beyond imaging. This is medtech. It's also about patient monitoring services that these companies provide, preventive care, and also the other solutions, which makes them a bit ahead of the competition, and they continue to hold dominance. And about Divi's, I would refrain from making any comments about them, but at the same time, I have a lot of respect, and the market is growing overall.
Right.
And the sheer availability and accessibility of these medical devices is propelling the growth of this segment.
You're saying the market is growing, your revenues were up 5% last year. Just wanted to understand what your own growth projections would be, say, over the next 2 to 3 years in terms of revenues and margins, because we did see a decline in your margins. And while we talk about that, what's also interesting is that this is an entirely offer for sale sort of IPO where you are raising funds only to gain visibility. So what's the kind of capex that you've lined up? How much is your internal accrual? Just wanted to understand the modalities of the business along with your revenue and margin projections.
Sure. So this, as a business, it's a 50-year-old company. It's a legacy business for us. And Contrast Media has seen some good growth, positive growth. The revenue CAGR has been north of 20%. In FY18, the company top line was 240 crores, and today, FY23, we closed at 720 crores. So we've seen a decent amount of growth in this across the segments that we operate in.
Mr. Singh, if I could come to you for this particular question, I wanted to understand the artificial sweeteners segment. It's around 20% of sales. Can you explain to us who are your key clients? What is the growth anticipated? And are there any headwinds in the industry simply because there are so many cautious statements coming out from regulatory bodies now about the use of artificial sweeteners? Has that impacted business at all? Mr. Singh.
Thank you so much. This is the high intensity sweetener segment. The global market is about $3.5 billion. Blue Jet as a company has been making saccharin for several decades. And over the last several decades, we have perfected the process for making saccharin. In fact, the process does not yield any byproducts. And there are certain impurities that we control in parts per billion level. So while the process gives us significant cost advantages or cost competitiveness, the quality of our product, where we control the impurity at parts per billion level, imparts our product a unique taste, gives it a very, very high taste consistency, because, in this business, in this segment, taste consistency and minimal aftertaste are very key factors for success. And they are the ones which impart the stickiness to the product, because, this taste imparts a flavor to the end product. And you must remember that saccharin is like a commodity product, but we are in the consumer segment, which is the top end of the pyramid. We are not in the commodity segment at all. Our focus is FMCG and the beverage industry. And for them, taste and aftertaste and consistency of taste are very, very critical components. And our product, we have been able to establish all three aspects in this product. We have built a lot of scale. We are completely vertically integrated. And we are one of the largest, worldwide. You will not find too many peers for us, even in this segment that we operate in. The commodity players don't compete with us because we are in a very niche and different type of segment. We supply to the who's who of the FMCG industry. We supply to the who's who of the beverage industry. We supply to the top innovator pharmaceutical companies.
Sure.
We happen to have the
All right, Mr. Singh. I'm so sorry, but we've completely run out of time, but we need to pick up this conversation probably post-listing, where we can discuss more numbers. Mr. Arora as well as Mr. Singh, thank you very much for joining in and speaking with us and giving us your entire breakdown of the business. We need to take a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.